Hello everyone, welcome back to my channel. Today we will discuss the chapter Balance of Payment and Exchange Rate. First, let us know what is the meaning of this word balance of payment. The balance of payment is a systematic record of all the economic transactions between the residents of one country and the resident of the foreign country. That means there is an exchange between the domestic country and the foreign country. And this exchange is of the economic transaction. Now let us see what are the components of this balance of payment. Balance of payment of a country has two sides, namely one receipt side and one payment side. The receipt side is called the credit side and the payment side is called the debit side. Okay, now see, the payments made by the country's resident to the foreigner are termed as credit. That means when a country, that is when a resident of a country, when they are making the payment to the foreigners, that means it is termed as debit. And when the resident of a country received the income, received the money from the foreigners, once more I repeat, when the resident of a country makes payment to the foreigners, it's termed as debit. And when the resident of a country receive the payment from the foreigners, is termed as credit. Now, there are various terms of balance of payment categorized in the two groups. So, I have make up two columns here. One is the current account. What is this current account? The current account, it is what? It is an international economic transaction relating to export and import. Unilateral transfer and international incomes are recorded here. This is a current account. And capital account is what here? This is also an international economic transaction relating to assets of both financial as well as physical. Now, first we will consider this current account, then we will discuss about the capital account. Now, what is this current account? So, we will consider first the current account transaction, then we will explain the capital account transaction. So first, what is this current account? This is also an international economic transaction. This is relating to what? Export, import, unilateral transfer and international income. Everything is recorded in this current account. So here I already make two columns here. So the first is a receipt side and here is a payment side. So what is in the receipt side? See, export of goods, and in the payment side is the import of the goods. That means when we are exporting goods, what we have to do? We are receiving payments. We are receiving payments. And when we are importing the goods, that means we have to make payments. Okay, that means when we are buying something, we are making the payment, and when we are selling something, we are receiving the payment. So selling here means export and buying something means import. Okay. Next, export of services, same thing. Export of services, that means when we are selling our services, we are receiving payment, and when we are hiring some services, that means we are making that is the import of the services, and we have to make payment for it. Next, unilateral transfer receipts. What is this unilateral transfer receipt? It may be a gift, indemnities received from the foreigners. Unilateral transfer receipt means any gifts we are receiving from the foreigners, and it is recorded in the credit side. And unilateral transfer payment, gifts and indemnities etc. make to the foreigners. That means when we are giving any gifts, indemnities to the foreigners. What is this indemnities? Security or protection against the loss or other financial burden. Okay, this is called the indemnities. Next is income received. When we are receiving any income and when we are making any payments, income payments, it will be on the debit side. And in the case of capital account, the capital received here means what? Borrowing from abroad. That means when we are borrowing something from the foreign countries, It may be a capital repayment when we are repaying, when we are selling any asset to the foreigners. When we are selling any asset, that time what happened? We are receiving payments. Next, capital payments. That means lending capital abroad. That means when we are giving money to the foreign abroad. And repayments to or purchase of asset from the foreigners. And when we are repaying to or purchase of asset, when we are purchasing assets from the foreigners, that time what we have to make payments. And when we are selling the asset to the foreigners, that times what we are receiving the payments. And what happened when we are making, when we are purchasing assets from the foreigners, that means we are making the payments. So it will be on the debit side. Now the current account transactions, the current account transaction is classified into four broad categories. First is what export and imports or merchandise. See, export and imports we have already told you. See, export of goods and import of goods. So this will be on the current account. So export of goods means what? All the physical goods are exported and imported. Export of goods means, here all the physical goods are exported and imported. Now when we are exporting, that means when we are selling any goods, it will come on the credit side. And import of the goods is appear on the debit side. Why? Because we are making payment for the import and we are making payment in the foreign currency. So any visible trade. So we are represent the country's visible trade here. Export and import of goods means country's visible trade. And invisible trade means for services which is not seen. Visible is what? It is seen, it is tangible, it has some physical form. An invisible item here is what? We cannot see the item. Here, this is what? Services. Services may be of what? Shipping services, banking services, insurance services. That means what? Payments received from the services are recorded on the credit side. Okay, that means when we are receiving payment from the services, shipping service, banking service. So when we are receiving payment, any payments we are receiving, it will be on the credit side. And when the foreign tourists come to India and spend on the Indian goods, then what will happen? They will make payment in the foreign currency. And whereas when the Indians make payment to the foreigners for the similar services, and when the when the resident of a country make a payment to the foreign countries for these similar services, that means that will be appearing on the debit side. Next is what? Unilateral transfer. Unilateral transfer means here the payment which takes place without the service in return. That means when we are giving any gifts to the foreigners, that means here what? In returning, we are not receiving any benefit. We are just giving the gifts. So donation is also one kind of unilateral transfer. Donation means what? We are willing to give anything without any service in return. So when we are receiving those gifts from the foreigners, that means it will be appearing on the credit side. And when we are giving any gifts or donation to the foreign countries, that means that will be appearing on the debit side. Then income here can be classified into the two, that is investment income and the compensation of the employees. Now investment income is what? Investment income is interest, dividends, profit. These are all the investment income. And when the resident of a country earn from the foreign investment, that will be entered on the credit side. That means when we are earning from this interest and dividends, then it will be appearing on the credit side. On the other hand, what will happen? On the other hand, when the payment for the capital received by the resident of the country, that means when we are making payment, from this on interest, dividends, profits, so it will be appearing on the debit side. Next, compensation of employees is what? Compensation of employees is including the wages, salaries that is received by the resident from the non-residents. That means what compensation the employees include what wages and salaries. Okay, these are received by what? These are received by the resident from the non-resident. So that will be happening on the credit side. And when the payment which the residents are giving to the non-resident in the form of wages and salaries, it will be appearing on the debit side. That means, in short, what we can tell, any payment we are receiving any payment, it is appearing on the credit side, and when we are making any payment, it will be appearing on the debit side. So this much for the today's class. You just go on hearing this video again and again so that the items which are going which will be on the credit side, the items which will be on the debit side, maximum of them make mistake in this. So very clearly I have explained this, and in a very simple language I have written also, and in simple language so that you can able to understand. In very short way I have written it so that it is easy for each and everyone to understand. So thanks for watching the video.